Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's February 13th. New York open prep. Softer U.S. inflation is taking some pressure off the dollar and lifting gold, while the ripple effects of tariffs are showing up in corporate results and in the fiscal debate. And oil is heavy as inventories swell even as producers weigh bringing supply back online. U.S. inflation cooled more than expected, with consumer prices rising 2.4% in January versus a 2.5% forecast and down from 2.7%. That nudges markets toward easier Federal Reserve policy later this year. Rabobank notes that a Kevin Warsh Fed chair would tilt in that direction too, penciling in 3 quarter-point cuts in 2026 alongside a balance sheet reset. At the same time, strategists at National Bank of Canada argue the U.S. fiscal path remains unsustainable, and tariff revenues don't change that trajectory. In Europe, the debate over a multi-speed union is intensifying as leaders look for ways to boost competitiveness. On the corporate side, Pinterest shares are under pressure, down about 20% after management said major retailers hit by tariffs have been pulling back on ad spending. It's a reminder that trade policy is filtering into marketing budgets and platform revenues. Looking ahead to next week, options markets are bracing for big earnings moves in names like Akamai, DoorDash, and Alibaba, while technicians flag a darker cloud after failed breakouts in the broader index. Offsetting some of that caution, J.P. Morgan is constructive on the aerospace engine cycle, calling it a golden age, with GE Aerospace among its favored names. Commodities are moving. Gold is hovering near $5,000 as the softer CPI print boosts confidence in eventual rate cuts, a backdrop that typically supports non-yielding assets. Oil, by contrast, is on the back foot, with crude inventories in the U.S. jumping by 8.5 million barrels, and OPEC Plus leaning toward resuming output increases from April after a winter pause. TD Securities highlights that Middle East tensions and Iran-focused scenarios could quickly reshape those risks, even as Iran faces intense domestic unrest and sanctions pressure. In the background, Germany's gas storage is unusually low for the season, though flexible liquefied natural gas imports reduce the odds of an outright shortage, and India is exploring a boost to gas-fired power during evening peaks to stabilize its grid. Market and sector focus. A softer dollar bias helps the euro and supports risk sentiment, while gold's bid underscores the rates narrative. Oil remains two-sided, with near-term pressure from supply and inventory builds, but a geopolitical floor beneath. Looking ahead, it's a quieter data slate today, but attention turns to next week's earnings wave and to the OPEC Plus gathering on March 1st for clarity on April supply plans. What you should be watching today: the euro against the US dollar, looking for an uptrend if the inflation-led dollar softness persists. Gold versus the dollar, with an upward bias while rate cut expectations build. West Texas Intermediate crude, leaning lower on supply headlines, but be alert for geopolitical reversals. The takeaway: softer inflation has given markets some breathing room, but trade policy and energy supply are still setting the cross-currents.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.